Indian real estate sector is likely to see unprecedented growth and it is likely to hit $1 trillion by 2030. And as a result of this, real estate's contribution to GDP is likely to go from 7.3% currently to almost 13% by 2030. More interestingly, Motilal Oswal presented this data slide which talks about by 2047 real estate market could go and hit $9.5 trillion, which is likely to represent around 17.42% of CAGR basis if we start calculating it from 2017 onwards. Now you will have a lot of questions about real estate sector. Rahul, what are the technicals of this sector? What are the valuations of this sector? What are the different stocks that we can go and explore, and which are the stocks that are doing well, which are the stocks that are highly overvalued? All of that I'm going to try and clarify in this one single video. If you're new to real estate sector, this video will teach a lot of good things about real estate stocks. And also, if you're new to my channel, then please do not yet subscribe. Watch this video for the next few minutes, and if you learn something new, become a lifelong subscriber of my channel. My name is Rahul Jain. I'm a SEBI registered research analyst, full-time investor and a full-time content creator. I hope you like this video. With that, let's get this video cracking. Let me first start our discussion with Nifty Reality's last 20 years of technicals. What is Nifty Reality? If you don't know, Nifty Reality tracks real estate companies, for example, likes of DLFs, Godrej, Prestige, etc. So this index tells you how the real estate sector in India is doing. Now, if I show you the last 18 years of data, you will understand that very, very clearly. Going back to 2008 and 2009, Nifty Reality Index fell badly. Of course, we know the reason. There was a big recession, there was a financial crisis globally, and Indian real estate market was not insulated with that. We saw a huge fall in Nifty Reality Index at that time. Since 2009 to almost 2020, Nifty Reality Index has been in a very, very long 10-year consolidation period. As you can see here, there was not much movement. Even if you go to individual real estate stocks, you will find pretty much the same picture here. Not much movement technically. 2021 to almost 2023, I call this phase as the recovery phase in Nifty Reality Index. Nifty Reality Index started to move up. Okay. And since 2030, if you look at 2030 and 2040, massive rally or expansion in Nifty Reality Index. And now in 2025, what we see is correction happening in many of the real estate stocks, and also Nifty Reality Index at a broad level, we are seeing some correction happening. Now, is this correction really the problem that is there in real estate sector? Actually, it is not a problem in the real estate sector from a demand perspective. It's just a profit booking that is happening right now because we saw a massive rally in 23-24. Why do I say that the demand is still very good? I'm going to present to you some data points. But before I talk about the cycles and the phases and which cycle exactly we are in, let me first speak about the valuations of the real estate sector, because right now the correction is happening and we need to understand, because of this correction, how are the valuations looking like? Now, as far as valuations of Nifty Reality Index is concerned, let me first speak about the earnings per share of Nifty Reality Index. What you see here is the green line. This green line is showing you how the EPS or the earning per share has moved in real estate stocks or Nifty Reality since 2010 almost. It used to be all-time high back in 2009, just before the collapse happened. And if you see how continuously it has been coming down up until 2020. Can you see the bottom was in 2021? In fact, that's why the real estate sector has been completely in consolidation phase, because the earnings have been coming down. But look at what has been happening since 2021. This green line has been continuously going up, and now in 2025 we are sitting at all-time high earnings per share, which has gone back to 2010 levels. So from an earnings per share perspective right now, absolutely comfortable. There is no problem here. If you see the real estate stocks falling down, that's not because of the earnings per share. In fact, in the last quarter, earnings per share has been quite decent. Now let me quickly move and talk about the P ratio of Nifty Reality Index. It is stacking at around 40.8 at the time of recording this video. And if I show you the complete pattern of this in the last 3 to 4 years, you see the pink line here. This is showing you the trend of the PE ratio. What you see here is that the PE has been coming down, was at bottom somewhere in May 23. It slipped below 40 for a temporary few weeks, and After that, it has gone back up, and now it has come down to almost at 40 level, right? So it is not that P is very, very high. It used to be at around 60, 70. And of course, at that time, valuations concerns will kick in. That's why if you see from 2024, let's say August, September timeframe, reality stocks have been coming down. Why? Because the valuation concerns kicked off as the PE was trading at around 70 at that time. Right now, it is come down, cooled down, and it is almost at the 40 level. Could it go down further? Yes, it is entirely possible. But overall, if you ask me, valuations are not crazy high. And the last 4 years data, why am I only comparing the last 4 years data? Simply because post-COVID, there has been a lot of money printing, and that has caused liquidity to go very high. And therefore, if you see here, the valuations are not very, very high. Now you may have a natural question that, Rahul, are we right now in a boom cycle in real estate, and is this bubble going to bust in real estate? So let me quickly take 2 minutes of time and explain to you the cycles of real estate and potentially which phase of this cycle we are in. So real estate typically moves into 4 phases. Phase number 1, I'm going to actually start from recession, which is where the property rates are flat bottom, the new constructions are not happening, there is a lot of inventory which is lying vacant there. That is called recession. After recession comes the second one, which is the recovery phase. In recovery phase, slowly the demands pick up, the prices start to go up, vacancies start to reduce, all that happens. Followed by the expansion phase, which is the third phase in my view, where you see demand going up very, very high. Strong demand is there. Supply is also there, but demand is very, very high. The property rates are increasing every single month, every single year. They are going up, up, up. And then comes the hyper supply, where what we see essentially is that the supply is huge now. There is a over expansion and the demand is coming down. The prices have to start coming down. These are the typical 4 phases, and each of these phases could last 4 to 7 years of time period. Right now, in my view, we are somewhere between expansion and are about to touch hyper supply in maybe couple of years time. Why do I say that? Let me present some data to you. And for that, I'm dividing real estate sector into 3 broad buckets. One is the residential, second is the office space, and third one is the retail space, which is like malls. Now here is some interesting data for residential. What you see is that if you look at the top 7 cities, and if you look at the Q3 2025, which is your July, August, September 2025 data, what you see is that 96,000 units were constructed in third quarter of 2025. How many units were sold? 97,000. So still there is a good sales demand in residential sector. As a result of this, if you look at the available inventory data, you will see that there is no overhang in inventory, meaning inventory is at good levels. It's not all-time high. It was all-time high back in 2021, but it has actually come down now. So from a residential perspective, data is suggesting that we are still in expansion phase. I don't think there is anything to worry here. And if you look at the office, this is even a better picture. Why? Because if you look at the office supplies, the new construction, 24.51 million square feet, while the demand or the absorption has been 26.8 million square feet. So the supply is less, demand is high in commercial space, and therefore I don't think there is any problem in the office space as well. But now comes the retail sector, which is the malls. If you look at the malls, what you will note is the purple line here, or purple graph in 2025 is telling you the new construction, while the bluish graph is telling us how much is the consumption or the demand. And as you can see here in 2025, slightly the demand is less, the construction is on the higher side, and therefore one could argue that the retail space, which is the malls, etc., is slowing down. So coming back to these 4 phases of the housing cycle, in my view, when it comes to residential as well as office space, I think we're still in expansion phase. And when it comes to retail, we are almost going towards the hyper supply. That's the reading of the data that I have made for myself. Let me now speak about various stocks involved in the sector and talk about their valuations, their current trends, and many good things about these stocks. But before I do that, let me give a big shout out to the partners of this video, Odoo. Odoo is an all-in-one business management software that helps you grow and scale your business through various apps. For example, invoicing, accounting, project management, and website creation, and much more. One such app is Odoo's project management. Using Odoo projects, you can set up various projects with customized steps, milestones, tasks, and subtasks, allowing you to break down complex projects into easily manageable smaller pieces. The dashboard comes with different views to help you. For example, Kanban view. This Kanban view shows you every task as a card within the different phases of the project. It captures all the key information within the card itself. Just drag and drop these cards and you can move to the next stages. The Gantt view gives you an overall visibility of task dependencies and timelines so that you are aware of who is working on what. Within each task, you can add more details like tags, description, deadline, priority, and with the inbuilt chatter, you can send emails and log notes to clients and internal teams, schedule activities like meetings, to-dos, etc. Everything stays within the respective task, making things organized. The best part is that you can use Odoo projects for free for lifetime. So if you have not yet tried Odoo, give it a go. The link is in the description and in the pinned comments. Now what you see on my screen is 9 real estate stocks, mix of large cap, mid cap and small cap. And what I want you to focus on is the recent trends in terms of their sales growth rate and the profit growth rate. Let's just make it very, very simple. And then we'll look at the valuations. What you see on my screen is that if you look at DLF, it's been struggling actually from a sales perspective and profit perspective as well. But if you look at quarter on quarter sales growth rate, if you focus on this column and look at the top 3 stocks, these are number 1, Oberoi Realty, 80% of sales growth rate quarter on quarter basis, followed by Godrej at number 2 and number 3 is Shobha. Now, if you look at year on year basis quarterly sales growth rate, then Shobha is number 1, followed by Suntac Realty at number 2, which is a very small cap company, and at number 3 is Lodha Developers. If we now shift towards the profitability side, and if you look at the quarter on quarter basis profit growth rate, then Shobha is number 1, 432% of profit growth rate, followed by DLF at 101% and followed by Oberoi Realty at number 3. If you look at year on year basis profit growth rate, then Shobha is at number 1, followed by Lodha Developers at number 2 and then Prestige at number 3. Overall, if I were to summarize, we can clearly see that Shobha has done really well in terms of all the 4 parameters. It is ranking number 1 in terms of YOY quarter sales. If you look at the profit growth rate as well, number 1. Secondly, Oberoi Realty also has done pretty good, right, from a quarterly basis. Quarter on quarter basis growth is seen in Oberoi Realty, but year on year basis you will see that Lodha has done really, really well. This is my summary, and let's focus on these stocks and compare their valuations now so that we get a very rounded picture. For that, what you do is look at the PE ratio of these particular stocks. Last 3 years is the filter I have given here, and if you compare, what you see is the PE has been contracting for majority of these stocks. And if you look at the PE ratio, Oberoi Realty and Brigade Enterprise, these 2 stocks are lowest PE as of now. And if you look at likes of Shobha, it is trading at 110 PE. No wonder it is trading at 110 PE, mainly because of the growth rate that we have seen. And if you look at, for example, Prestige, very high PE, 95, DLF, Lodha, they are in mid segment from a PE perspective, and as well as Godrej, right? So this is the overall view from a PE perspective. What about EV multiples? So if I look at the EV multiples here, what you will note is that again from a EV multiple perspective, if you look at the data, Brigade and Oberoi is the lowest from a EV multiple perspective. DLF very, very high, Lodha and Prestige and Phoenix almost at mid-level, and Godrej Property we don't have a data here, but overall Brigade and Oberoi looking like a value play here. If I come to price to book ratio, so let's go to price to book here and also compare that for these stocks. Again, Oberoi Realty and Brigade, they are the lowest, cheapest from a valuation perspective. And if you look at Lodha, very high, 5.52. And if you look at Shobha, it's not very high from a price to book perspective. It is at around 3.55. DLF is at 4.18. Overall, if you see from a valuations perspective, 2 stocks stands out. One is Brigade and Oberoi. And out of these 2, if I take you back from a growth rate perspective, Oberoi actually has done pretty well. If you look at quarter on quarter sales, 80% up. Quarter on quarter profit 80% up. This is why I would like to focus on Oberoi Realty and give you some deep insights now about Oberoi Realty, some interesting data points that you need to learn about Oberoi that I found while comparing with many other stocks from a fundamental perspective. But before that, so far if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. And also hit the subscribe button if you're learning something new, because you don't want to miss out the upcoming content. With that, let me now deep dive into Oberoi Realty and give you some insights about this particular stock. If you go to screener and check P&L account of Oberoi Realty, what you will notice very interesting two observations. Number one is if you look at the sales, it's sitting at all-time high sales. If you look at the net profit, almost all-time high net profit as well. But more importantly, look at the margins, which is if you look at the profit, net profit divided by sales, it's almost 40%, right? 2233 divided by 5328. Compare this with many other developers. For example, let me show you the data for Shobha. What you note here is the similar top line that they are doing 4724, but look at the profits, only 149. And you are paying almost, if I show you the PE ratio of Shobha, it is at 110. Again, I'm not saying that PE is the only measure here, but I hope you get the point here that the margins are so thin for Shobha, but still the PE is very high. One red flag in my view. If you look at Lodha developers, again here, if you look at the net profit margin, not huge. If you look at sales, that is around 15,000 crore and the net profit is only 3,000 crores. Much lower profit margins as compared to Oberoi. Only one stock that I found, which is DLF, is sort of in the similar profit range. For example, 9,000 crore is their sales, and if you look at that, 4,200 crores is the net profit, almost very similar profile to Oberoi Realty. So coming back to Oberoi Realty, it is very high margin company, and that is what I like about this particular company. It's a Mumbai based developer. It deals with highly premium properties only. So that's another good thing that you need to know about. If I come back and talk about other factors, for example, here adjusted operating margin we talked about 59%, although slightly come down from the last year. Net profit margin around 40%. If you look at the ROCE here, ROCE 13.64%, which is slightly less than the last year, but it is top notch in my view. If you look at the net debt to equity, almost debt free company. We know Oberoi Realty as a group, they are doing pretty well in terms of Mumbai locations. I'll come to that in a minute in terms of their expansion. But also if I talk about their operating margin analysis, why this margin is very high, one of the reason is that the rental income they get from office space is actually 92%. It operates at a 92% of operating profit margin. It is very high. Even residential, if you see, 55% of operating margin is what they achieved in FY26 Q2, and hospitality is slightly lower, 39%. But all in all, very good operating margin is what I found. If you look at the cash flow of the company, very healthy cash flow. If you look at H1 FY26 positive cash flow overall, it's around 3,270 crore versus previous year, which was around 1,815 crore. So cash flow position, not a problem at all. If you look at the expansion now, the management is saying that they are going to launch in Adarsh Nagar and as well as in Gurugram. So they are moving towards north side as well. I don't know what it will look like, but seems like a good strategy to move to north as well. Now, if you look at the last 10 years of PE multiples of Oberoi Realty, the median is around 27.8. Right now it is trading at around, let's say 26.1. So it's not hugely overvalued in my view, if you look at the median performance. And also one could argue that, you know what, the PE has dropped to, let's say here, almost here 17, right? Here as well again 17. Here as well again 19 or around 18. So these are maybe the worst case scenarios for PE to contract. Can it contract from here or not? I don't know. But right now, if you look at the demand of the properties in Mumbai, if you look at the north, it's looking very strong. If it comes down to, let's say, I don't know, 18, 19, 20 PE, it is literally at rock bottom valuations. And therefore, what I would request you to do is to explore Oberoi Realty, explore all other stocks as well. I have just scratched the surface here, but given you quite a good level of detail so that you can make some good decisions based on your analysis. Please do not take any of the stocks here as recommendations. My intent was to teach you something that is meaningful from an overall sector perspective, as well as compare few stocks so that you get the current trend. And lastly, I've gone slightly deeper into one of the stocks. I would request you to go down and look at other stocks as well. With that, I hope you liked the video, and if you did, hit the like button. Let me know in the comments. A simple thank you. I look forward to seeing you in my next video. Until then, keep rocking.